Hello everyone, good morning. So in today's video, let's learn about ICT's PD Array matrix. So this is the basis of Hopi's work, where he gives you a PO3 range and then maps all these PD arrays with Goldbach numbers. Okay. Now we can trade using the ranges as well. Now how I interpreted this on the time axis is what I will teach you. So all we want to know is there is a high or a low, and then there is a rejection block, then there is order block, then there is fair value gap, liquidity void, breaker, and finally mitigation block. Okay, now we don't need this. Now since there are premium and discount, and Goldbach's definition is that two prime numbers equaling to 100, he gave two numbers, one in discount below 50 and one in premium above 50. Okay, so now highs and lows are not GB numbers, they are just 0, 0 or 100. It's just a range, high and range low. Rejection block is 3 and 97. Order block is 11 and 89. Fair value gap is 17 and 83. Liquidity void is 29 and 71. Breaker is 41 and 59. Mitigation block is 47 and 53. So I use only few of them. Like, I'm not a fan of mitigation blocks because I don't understand them. And rest are pretty simple to navigate. Okay, so let's remove this and let's focus on this. Now highs and lows, 0, 0, 100. So what does that signify? So anytime a high or a low is made at the beginning of the hour, they are pretty significant. Now you can go back and check the FOMC news. Okay, so FOMC news gets printed at, I believe, 2 o'clock, which is 0, 0, and that is New York time. And if you look at why is that high very important, it's because here, right now I'm using Zurich, which means it is 8 o'clock, but sweep of this high 0, 0 caused a massive meltdown. Now you can go back and check the one who trades, or one who never loses and always wins. You can check Frank 369's trade. This was the entry for him. Okay, and why is this a good entry? Now, will every time a 0, 0 makes a high or a low, is it a high probability trade? It is a high probability, but it doesn't mean every time you will win it. Otherwise, that becomes a cheat code in the market, right? But what makes this trade special is there is an 81 PO3 range high here somewhere. Okay, so let's open our calculator and try to see here. So the price is around 30.4468. So if I divide by 81, I get 376 into 81 would be 30,456. So now you have some more additional confluence. So if there is a 0, 0 made at a PO3 range high, it becomes a significant high. And then what happens? We run, there is a 27 point stop run here, right? So we already had some engineered liquidity here. Market moves 27 points, dumps. Later we take that high and dumps again. Okay, so this is the significance of a 0, 0 high and low. Now I showed you an example of a high. Now let's look at a low example here. So 1601 is also the low here. Okay, so with plus or minus 1, I can consider this as a 0, 0 low. Okay, and then old highs and lows are swept, you get a big bullish move. Okay, these are also not small points, so if you held it, it's 164 points. So next time when ICT says old highs or lows, we should always think about 00 highs and lows from a time perspective. Okay, now time is something which is not subjective at all, right? So if you're looking at this 00, I'm also looking at this 00. If I am talking about PO3 ranges high and low, it could be subjective because I might be looking at 81 PO3, you might be looking at 243. So we might miss out on some highs and lows. Okay, so try this out. So the next PD array that we have is rejection block. Okay, so how do I interpret this on a time? So either the third minute. Now how do I represent 97 on the time axis? It cannot be. So the only time that I see work is 907. Okay, so it kind of adds hours and minutes like this without doing the actual addition. Whenever you see this 907 time create a wick, that would be your rejection block. Okay, how do I know what is a rejection block? It's nothing but a rejection a wick, right? Like kind of a doji candle. So you can check every hour, third minute, and you'll see something. So something like this, 1703. Okay, so we expect price to hold here and then go higher. Okay, obviously there is other context that you need to read into. You cannot just trade based off of PDAs. Okay, that's why algo path is pretty important. So here you have 19. So I would like to see 7 also being a rejection block because that is a CE number. So more often than not, you can see this 2008 creating the wick, and in this wick you get a sell. Right. So if there is a point of interest for you, and if there is a 3 or a 7 creating a wick, it's most likely to hold there. Okay, so that's your rejection block. Now order block is pretty simple. Order blocks are formed either at 11:14 or 89. Now 89 I can represent as 8 o'clock 9 minute, so that is just one occurrence, but every hour you can check 11 and 14 to be the bullish or bearish order block depending on the order flow. I would emphasize on 14, that is the CE time. So here 113 is the order block. So 1 plus 13 is 14. So you can mark this. Is this an order block? Yes, because we had the high of this order block break. And later you can see price take support there at the 50% of it, the mean threshold of it. Similarly, you can check for others as well whenever you see an order block. They are most likely to form. So here there is a 511 order block, right? So mark it, and maybe in future when the price comes there, there will be some reaction. Okay, if not, that's why I say always trade shouldn't be based on just the PD arrays. It is always based on the algo paths. Okay, but these PD arrays, timed PD arrays, will help you navigate. Okay, so what is the next PD array we have? So after fair value, sorry, order block, we have fair value gap. So this is 17, CE is 23, the premium is 83, so that would be 8 o'clock third minute. Okay, so whenever we see fair value gaps created around 17 or 23, it's likely to hold. Again, with context of algo path. So So there is this inverse fair value gap of 717, right? So once it is broken, so this becomes inverse and price reacts there. Now there is a 822 gap here and price respects it. Like we don't break below this low, right? And FEG is a formation of three candles, and you can see you get a big move, right? So that's FEG. Next you have liquidity void. Liquidity void is also not nothing but gap, but these are formed at 29.35 or 71.77. Okay, they are normally bigger. You see bigger displacement during this uh, time. Why is this? Is because now you know already, since I have taught you algo paths, you know 29.35 is the end of the path, or even 71.77. So end of the path means from there you should see reversal. But if the market is not in the mood to reverse, it's going to create bullish gaps around these times, indicating that there is still energy left for the up move or the down move. So you can always watch out for it, right? So here 836 created a gap, but it didn't follow through, right? We want to see follow through once this 35.29 creates a gap. Since we created a low here, which means this is the end of the sell and buy begins. So you can watch out for some break. So here again 1235, you can see it's stopping the price, right? So from here you get some bull move. It's pretty choppy. It's not displacing at least around these times. But it is pretty much an indication like here. Okay, so we have a 29 gap and then there is no follow through, but again we break above it, right? So once we break above it, you, you can assume that this is the liquidity void which gave us a bullish gap and price is likely to continue higher for some period of time. Okay, let me see if I can find one good liquidity void example for you. I mean, I don't trade basically based on PD arrays, but I had some questions coming in asking me to show what times are important, what we need to look for in certain PD arrays. Okay, no. So most of the time, this 29.35 makes a high. So it is indicating of algo end and start times. Okay. And once this 30.35 makes a high, then you know this is the end of the algorithm, so you can sell, okay, until the next path. At this time, and if it had displaced above, then use that liquidity voids to enter. This probably you can show it using a PO3 number, a PO3 range. Let me quickly put on 243 range so that you understand what I'm trying to say. I don't want to just rush through it. So this is one range, so I will put one range below this, 3375. Okay, now let's draw a range. Now what you need to observe is observe this 29 level and 71 level. Okay, there will always be big fair value gaps if the market is bullish. So you can see here, right? So in as soon as this area is approached, it is creating gaps, indicating the market is bullish. As soon as we are trying to break above this 71, you can see this big gap indicating it wants to go higher. Okay, so that is what I meant. So even in time, you will see this. Here also you can see as soon as it wants to drop at 71, it's going to create big gaps here. So that is the meaning of a liquidity void. Okay. So next we study breakup, the last PD array that I am interested in. So 41 or 44 or 59 or 65. So what is a breaker? Breaker is a failed order block, which means, and it also has a character of sweeping both liquidities. Right? So it will take the sell side and also the buy side. Then it becomes a bullish breaker. That's what ICT's definition is, right? So we saw just now this market sweeping this low and sweeping this high or whatever. So it takes both sides liquidity, and if you look at the time, it is 44. So you can go back and check most 41s, 44 will do the same thing. It happens during New York time a lot. So here you can see it's in the low which took liquidity, which means sell side is grabbed. Now it's going for the buy side. The subtraction option of it is also very important. 1556 is 41 still. And what it does, it sweeps the buy side, comes for the sell side. Okay. So to summarize, highs and lows, look at 0, 0. Rejection block, look at 0, 3, 7. Order block, look at 11, 14. Fair value gaps, look at 17, 23. Breakers, look at 41, 44. Liquidity void, 29, 35. So all these have some functions. So this will make a high or a low. This will make a wick, which is a rejection block. So once the wick is retested, you can get in. This will make either a bullish or a bearish order block. Fair value gaps, simple. 41, 44 always takes both side liquidity. And liquidity void is something you can clearly see them. The displacement is pretty large. Okay? So large candles. Now you might have heard ICT say big candles incoming. Like, so they are mostly around this liquidity void area on the PO3 range. Okay. So hope this matrix helps you understand and focus on which time. Okay, there is no subjectivity involved here, right? So if you're looking for an order block, always look for a 14 order block, right? It is likely to give you a high probability trade. If you are looking for a fair value gap, look at 23, 7 wick, 35 candles, 35 large candles. So it makes your trading much simpler. Okay. All right. Thank you for all the support. Let me know if you have any questions in the comments. Take care. Bye bye.